Happy Thanksgiving. If you're in America, Chris Vermeulen joins us once more. He is the chief market strategist at the technicaltraders.com. We'll be talking about his outlook for the markets. I know markets are close today, Chris, but I appreciate you coming on the show. I want to talk to you about the Trump trade. It's been slowing down. Markets seem to be reaching some resistance, especially Bitcoin. We'll talk about Bitcoin as well. Welcome back.
Hey, thanks for having me, David. Always a pleasure. And thanks. Happy Thanksgiving to all Americans.
Well, I want to start with stock markets first, as we always do. The S&P 500 reaching 6,000 points not too long ago, and then retracing from that. And I'm wondering why, because 6,000 was a critical level, and it's a key psychological level. And I wonder if reaching key psychological levels historically meant a huge or further rally to the upside, or maybe just profit taking. What do you think?
Yeah, psychological levels. I mean, if people don't know what that is, psychological level is typically like I call it a whole number. So like, for example, at $5,000, when something's moving up, people in their head will say, well, if it hits 5,000, I'll sell something. So the SP 500 hitting that 6,000 psychological level, people are like, if it hits 6,000, I'm going to lock in some partial profits. There will be a group of people that say if it hits 6,000, I'm going to short it and expect it to top. So whole numbers like that, 5,000, 6,000, 7,000, they all will act as resistance if you're under them. We're seeing this in Bitcoin. You and I will touch on that after. It's a perfect example of that as well. So right now, the SP 500 is trying to kind of eat through that psychological level. And there's a few headwinds, I think, for the stock market. I think the big techs are struggling for a bunch of reasons. The Trump trade, I think, is kind of fizzling out with his talks of tariffs and semiconductor stuff. And that's really taken the headwind out of the, or put a headwind to the large techs, which really drive the overall broad indices higher.
The tech stock, can you maybe just pull up some names? Actually, maybe we can just take a look at the NASDAQ to start with. And let's just see how the NASDAQ is doing relative to the S&P 500. The NASDAQ, dominated by the large tech names, they liked the Trump win. So the day of the election, I can't remember if I think we did. Yeah, we spoke the day of the election.
Yeah.
Recall that there was the day after, rather, there was a huge euphoric rally. And you were talking about how this rally could persist. And it's now been about 2 weeks now. And there has been an uptrend, although the NASDAQ peaked right after the election, and we haven't reached its peak yet. So things are cooling off a little bit, but how does the midterm outlook look for you, despite this pullback?
Yeah, so I always mention this to subscribers. It's really important for everyone to understand that when there's a news-driven move in the market where it just goes straight up, like we saw with Trump wins, and it goes straight up for 2 days, everybody piles in. A news-driven move you cannot trust. It is usually short-lived. It's just everybody buying and nobody wants to sell, so prices goes up. And that's what we saw. We saw it pop, and then of course it gave pretty much all of it back within about 5-6 trading sessions. And now we're kind of back into a little bit of a drift higher going forward. And everybody piled into it. But the thing is, I think Trump he's really putting his foot down, especially to Canada with tariffs. But he wants to put tariffs on like semiconductors, and he wants businesses to be in America. And, the NASDAQ is tech heavy. It is semiconductor heavy. And so it's really taken, I think the investors aren't that excited to get into them if they're going to have these huge tariffs and profit margins are going to drop dramatically. So the big tech is kind of holding the market back, but the overall market is still in a strong uptrend. I mean, it's still trending higher, as you said, David. I'm not a huge fan of this type of price action on the NASDAQ, particularly where we have this big red bar down and all of these are like inside days. This from a candlestick pattern is a bearish sign. Usually you'll stair step your way up to the top of a candlestick, and then it wants to come straight back down, and then we'll go even lower. So I'm hoping and praying this market gets some traction and breaks above this blue box and starts another rally. When we look at the SP 500, as you were mentioning, compared to the NASDAQ, so if we look at the NASDAQ price action here, the NASDAQ's still flirting with breaking to new all-time highs. Whereas if we look at the SP 500 in the exact same time frame, it's just been kind of trucking up and to the right. It broke out a long time ago. And so the SP 500 is a little bit more of a broad market. And we're definitely seeing more of a broad market rally, especially small caps really popped on Trump. And right now we're just having a little breather. These little breathers that you have after a pop, all it is the market's trying to digest a previous high. We had the same right here, just a little pause as it tries to break a high. We've got a high right here. So I know people are pretty nervous right now that the market's going to roll over, but in the grand scheme of things, I think the stock market is ready to prime the SP 500, probably 2%. We could probably see that in a session or two. It is primed and ready for another high momentum pop. So I'm still bullish. We're still long equities. And seasonality wise, we're definitely in a favorable time for the stock market. When we look at the SP 500, we see an upward move through November and a push up through December. And so we're like, we're right here at the end. We're literally on this little pause that we're seeing on the SP 500 right now. As we kick it over to December, we should see a nice push higher. And the charts show about a 2% move on the SP 500, which means the NASDAQ will probably also move 2% or so. It's actually underperforming, so it might not outperform the SP 500, but both of them should move up together just seasonality wise and based on the short term price action.
I want to see if this current price action is repeating any signs or showing any signs of repeating 2022 or late 2021. Recall that late 2021 was the peak. People were euphoric then, and then we had a big drop as the Fed was raising rates. Any technical indicators that point to similarities?
Yeah, I do think there's the momentum in the market. I think what assets are doing, gold and utilities and energy stocks and things like that, and just the stages we're in. I believe this scenario back over here is actually very similar to where we are right now for the markets. I feel like we're going to see the stock market push up to the end of the year just because Trump is getting in. There's still money moving in and allocating, and it is naturally a positive time. People are in a good mood. They want to buy investments. They want to add to portfolios. This is just a time of year that the market wants to go higher. Come January, though, I got a feeling things are going to get pretty ugly and violent, and we could see a much bigger drop. And we might go into something like 2022 and put in a major market top. And there's a pretty good stat is like however January closes, if January for the SP 500 closes positive, it's usually a strong year or a positive year for equities. If it closes negative, it's usually a negative year for equities. So I think this momentum in this Trump kind of bump in price and his inauguration in January, I think once all that fizzles out, I think we could see some big selling potentially step in. I feel like we're like, within 60-day window of the markets putting in a major top and selling coming in. Once Trump gets in, that's when everything's going to start coming into effect. Tariffs and stuff. Then it's like the real deal. So I think 2025 is going to be a volatile year, mostly to the downside for probably most asset classes.
Before we move forward with the video, I want to take a moment to talk about our sponsor today, Novium, which has a truly unique product, possibly the coolest pen I've personally seen. This Black Friday, Novium is offering its biggest deal of the year with a limited time 20% discount. If you're looking for a standout gift, the Hover Pen Interstellar defies gravity, literally levitating on a stand using magnets to make an elegant statement in any office or home setting. This is definitely a gift that will be remembered. The Hover Pen is refillable, crafted from aircraft-grade aluminum, and designed with ergonomics in mind for a comfortable writing experience. It has even been recognized by Time as one of the best inventions of the year. Novium also offers the Hover Pen Future, a fountain and rollerball option for those who prefer versatility. Don't miss this 20% off deal. Use the code DavidLin at checkout. Scan the QR code here, or check out the link in the description down below to get yours while this Black Friday offer lasts. 60 days to topping. I mean, nobody knows exactly when, but roughly, how did you come up with that timeline?
I come up with that timeline just based on momentum, just based on gut feel, based on Trump getting in the seasonality window, and January is usually a pivotal year for the markets. If we're going to have a negative year, I think January is going to be the year the market swings around, or the month the market swings around. I could see that as the title of this video: "Market Tops in 60 Days." Be prepared.
I wasn't
but it's just a gut feeling.
But that's not a bad idea. Chris, I've heard this comparison before. When Ronald Reagan won the 1980 election, he was inaugurated 1980. He won 1979. And what happened after 1980 was the markets went down about 26% before climbing back up. So that was a comparison that was made once. I'll let you comment on whether or not that makes sense from a technical perspective.
Yeah, so if we look at the last major rally up in the markets from the October low of 2022, this last move, I drew the Fibonacci extension or retracement on here, and the sweet spot for a pullback in the market is usually somewhere down between 38 and 50%. So giving back 38 to half of this rally to the upside, and based on where we are right now, we're looking at 15 to about 20% downside move for that first kind of pullback. And that is definitely a sweet spot. In fact, if we were to kind of just bring this down a little bit lower through here, it is kind of above a major support level, major pivot high from back in 2021. It's also a major pivot low. Well, there was a breakout, a pause here, which is a good sign. It means that this is a resistance area. This little pause before it could eat through this high resistance. And we have this pullback. So we could very easily see the SP 500 pull back that 15 to 20% on the first move down. And that move to me will actually be the same as this move over here, where we have this pullback. And this is where things are going to get interesting. This pullback in 2022 was a bear market. It was a very, very soft and gentle one. The damage here was bonds were going down with the stock market, which scared the heck out of people. Um,
Yeah.
this time around, I think this pullback could be the first leg to the downside. Meaning, if we go way back in time here, we could see this market eventually find some support, put in some type of bear flag pattern, and then eventually break down to another level and then pick up speed. And I think things can get very, very ugly. As you know, I've been bearish for several years, but just because I'm bearish doesn't mean I'm betting on the downside. We're still long equities, but the scenario, knowing there's downside potential and knowing it could happen at any time, keeps you on edge so that you have a strategy to identify it and avoid it and profit from it. So this next pullback that you just talked about 20%, I think is perfectly in line with the chart pattern that we're seeing here based on Fibonacci retracement and the type of volatility we have. This market has gone up so fast. It's going to come back down and have some correction. And it would be interesting to see where this Fibonacci retracement level is here. Look at that. So if we look at this rally up, it came right down into this blue box, this sweet spot here, which is that 38 to 50%. So as you just said, David, it's like perfectly in line. Expect a 15 to 20% pullback in the SP 500. The question is it just a pullback? Is it a buy the dip, or is it like, a pause before the bloodbath, like the music comes to an end, which is what I'm hinting to or thinking is going to happen, is the music comes to an end. We go into a massive correction. It takes years to recover from. Huge opportunities, though. It's going to be pretty amazing.
How would you, as a trader, determine if something is oversold or, if the markets are oversold or if the markets are beginning a bigger bloodbath?
Well, it'll really come down to this type of, after the market has sold off, it's going to come down to how other assets reacted. How did gold move? How did the dollar move? How did utilities move? Small caps versus dividend stocks. What type of price action does it form? Does it form a bear flag? A bear flag is the halfway move, meaning it's going to, whatever this drop was, once this bear flag ends, you're going to have the second half of that move. And so we really just need to gauge and see how things are moving. And based on how things move and how the chart pattern unfolds, we can be like, okay, this is a bearish pause. This is nothing more than a bounce or a pause before we go lower. And then we take a position to profit from the collapsing price as we break down into a much bigger market, like a stage 4 decline, a multi-year sell-off. This first leg down will just be like a shot across the bow of like, this is your last chance to get out before the bottom drops and your retirement gets reset.
Yeah. Okay, Chris, let's talk about Bitcoin. I need to ask you about Bitcoin. Like the 6,000 round number for the S&P 500, the 100,000 mark is another major round number. I remember 3 years, 4 years ago when I first started covering the space, people were talking about the theoretical 100,000 mark and they got laughed at. And here we are at 99 was the last high. And it just doesn't seem to be reaching that resistance level. Anyway, to be clear, we have not reached yet the $100,000 mark. And the question is when, if ever, if it will happen. So I'll let you comment on that.
Yeah, and I guess depending where you look, like the futures chart actually just pierced $100,000 a couple of days ago. But this comes back to that psychological level you said, David, that whole number, 100,000. People have been talking about this for years. As we got closer over the past 2 weeks, people keep talking about 100K. Will it hit 100K? And so that plants more and more seeds in people's mind to be like, hey, if it hits 100K, I should probably sell some or sell all of it. And that's exactly what happened. It came up a few days ago, hit 100K, and then a bunch of sellers came in and started unloading, locking in profits. As it starts to fall a
Well,
little
did you
bit, people
notice a
get,
spike in volume around that 100K mark?
yeah, it'd be actually interesting to see what the intraday chart did on that. If it was a huge bout of, where is that 100K? Let's just take a quick look. Yeah, here we go. So here's that 100K mark. So yeah, it ran up to 100K and then it got clobbered with a huge sell order. So somebody has had an order as soon as it crosses 100K, just execute, hit the bid, fire off shares or whatever you want to call it, Bitcoins, and sell. A bunch of others started to get into it and people got scared, and more profit taking took place. So definitely a perfect trigger in terms of expect selling to step in. And right now, when we look at the daily chart, I was telling subscribers this before it happened. I said, listen, guys, we're going to go up to 100K. If it hits 100K, we're going to see some selling. There's going to be a bit of a pullback, but it doesn't mean it's topping. It's just a little short-term mental resistance level that people are trimming profits. Some people will try to short it. But the key thing, like I got long Bitcoin a couple of weeks ago, and it first time I bought Bitcoin in like a decade. And the reason I did that is because when you look at this monthly chart, it doesn't really get any better. We've got this massive cup and handle pattern, which is one of the most bullish chart patterns you can get. If you want to get rid of the silly kind of cup and handle name to it, you could just say, well, there's a huge bull flag pattern. That is the halfway point. And using Fibonacci extension, which I find is the best technical tool to gauge support and resistance areas, if we take it from the low up to this high, and then down to this low and carry it forward, this tells us where Bitcoin should go to next, which is about $108,000, $109,000. So we hit our first target at this yellow line. We sold half of our position, and now we're just waiting for it to go up and blast through this 100K mark and hit our next target up between 100 and 109, 113,000 is our upside target. So I like Bitcoin, not as an investment. I am not a Bitcoin person. I bought an ETF that trades Bitcoin. I don't actually trade the crypto itself. But the reason I like this is because it's such a herd mentality trade. And you get to a point where like everybody piles in and they do it. There's just such a herd mentality that when it starts, I'm like, let's just get in. This is just a short-term trade. Hopefully it only lasts a few weeks and we'll get in. And when the whole world piles in, it creates this big green spike. We'll hit our targets and we'll just cash out and then let everybody else deal with it. So I like Bitcoin. I still think it's going higher. And I think in a couple of days, we could be at that $109,000 mark and it could go a whole lot higher from there. But that's where this chart pattern over the past several years are pointing to. And I remember being on a Bitcoin channel back when it was at 39,000, somewhere in here. And they were talking about, I got laughed off the show by their whole group of people interviewing me. And I said, this is a very bearish chart pattern. Bitcoin is pointing to 16,000. And I got laughed off the show. They laughed and talked about me for like an hour after that. But we ended up going down to 16. Bitcoin when it has one of these types of moves, it actually had this type of move back in here, a bear flag pattern. This is the halfway point, and the second half of that move was 16K, which we hit. So this is like the flip side. This is the upside target. Very rarely do I get these really clear signals. And this time I'm just like, all right, we're taking this one because it should be almost like a gimme.
You mentioned that the stock market could top sometime in the next 2 months, right? After the Trump inauguration, volatile year. Recall that Bitcoin and the stock market, particularly with the NASDAQ, they've held a very close correlation all year round, even today. So I wonder if the same logic applies to Bitcoin.
In terms of Bitcoin moving with the equities market?
In terms of Bitcoin moving with the equities markets, topping sometime in the next 2 months, having a very volatile year in 2025 after the inauguration of Trump.
Yeah, I think it will. I think Bitcoin actually might hold up. It'll be interesting. Bitcoin is a wild card, but We've definitely seen as soon as Trump won, we saw money come out of gold and it went into Bitcoin
Yeah.
because he's talking about a reserve. It also went into small cap stocks right away because they're not directly connected with the semiconductor and all the big tariffs as much. And Trump wants to knock the US dollar down because it's so high. It's also hurting the multinationals, the big tech companies. I mean, when you look at all these different currencies, take a look at this, David. When you look at these currencies, the US dollar has been on a tear. Every other currency is just flat out moving lower and lower. So these multinational companies charging services, it's really expensive for all of us other countries in Canada because the dollar is really strong. So this is a big headwind. And so it'll be interesting to see how Bitcoin reacts. I don't know. Right now, it's in a super strong uptrend. I expect it just to go higher. But I would expect when we go into a recession, the stock market starts to sell off and we're in a massive bear market. I got a feeling Bitcoin will move with it. Generally, money is either moving into investments as the whole world goes, like an upward cycle or rising tide, or people are trimming back on their investments and selling and everything goes down. So I would think it's going to move with the overall economy and move down with the stock market, but it might continue to hold value a little longer, kind of like what gold does, where Bitcoin and gold could end up holding their value while the stock market falls 10 or 15%. And then Bitcoin and gold will catch up and start to fall with the market. I think they could act as a defensive safe haven play short term.
What happens once Bitcoin hits, I guess, a new psychological level, like let's say 110, 120? I mean, usually, again, for cryptocurrencies, when it's hit a peak, in the past two cycles, it's bottomed out. I wonder what it would happen once it hits a new psychological level. I guess we can look at it in a few ways. First, if you were to zoom out and take a look, I don't know if you want to switch over to TradingView for this, but if you zoom out and take a look at the last two peaks, 2017, late 2017, and then 2021. And then if you draw a straight trend line from the last two peaks, the trend line kind of converges to where it's currently at now. So if you, I'm not making the argument that this is the top, but it certainly looks like
Yeah, let me see if I can get this
there
to.
is some room to climb before we hit a top. If you follow this trend line, you did say on my show last time, where I think two episodes ago, 120 Bitcoin makes sense to you before correction.
Mhm.
Are you still sticking to that even after this move?
No, I think it's a little lower, and I think the reason why that's lower is because we had this. Um, I'm taking a more conservative kind of upside target. I think the upside target is 109,000. That's where the chart to me is pointing to. So I think that's kind of where we're going. When we look at this long-term chart, I don't really use trend lines. Like we could draw different trend lines on here. If you connect these two highs through here, which I can just shorten that up. Um, we are kind of technically flirting with that trend line, depending on how you draw the chart, but I don't use trend lines because they're generally always breached and you don't know if it's a breakout or a fake out. I really like to follow overall chart patterns versus a trend line that can be pierced. Overall, I think we've got room to run up to this 110, 109. 110 is the next kind of whole number. So that and that's our target set just below that at 109, so we can hit it. Sometimes things will fall short of a target. Um, Overall, I mean, I think you just need to expect Bitcoin to continue to push higher. Once it hits 110, you've got to expect some more selling. There might be some short-term profit taking, but I do think it's going to be much more severe because it's based off of, not sure how to draw on here, but it's based off of this bull flag pattern.
Mm-hmm.
It's using the Fibonacci level. So once you hit 110, we're taking a 2-year chart pattern. It's huge. We're probably going to see a pretty big pullback. I wouldn't be surprised if it pulled back somewhere to like 90 or 80,000 in there and consolidate. As you mentioned earlier, David, once we've hit these other peaks, we've seen very strong pullbacks after that.
Yeah.
So it'll be interesting to see where, I mean, once we hit that level, I'm cashing out. It's that simple.
Okay. Fair enough. I want to talk about some Trump trades that may or may not be true or misconceptions. One of them is if you were to take the risk on sentiment, you should be staying on the sidelines of things like utilities or even shorting utilities. But if you recall in the last Trump presidency, utilities did very well. If we take a look at the XLU, for example, during 2017 to 2021. Had a huge rally. I don't know if you can show that here.
Yeah.
Yeah, utilities
Uh,
did great in the last Trump presidency. You see that bottoming out around 2018 and then rallying all throughout to 2020.
yeah.
So,
Yeah, and this is I like to follow utilities very closely, actually. I believe we're in this kind of when utilities outperform as much as they do, they'll have waves where they outperform dramatically, like the SP 500. Usually, it's actually a very bearish sign, and the stock market has a pullback. Then utilities will pull back with the stock market. But we've been in a very similar, like a tear. We had this massive move to the upside. We have another massive move to the upside. And I would say we're starting to get pretty volatile. We had a sharp pullback. We have a very sharp rebound. Over here, it wasn't so much a sharp pullback, but we have a sharp rally. It's not about if it goes up or down. It's just is there a sharp move, like a parabolic pop? And that's what we're getting again right now. And when utilities are performing really well, and we see gold, which has been on a tear, performing really well, these are all early warning indicators that people are nervous. They want to move to slower assets, dividend paying assets, or physical gold to get outside the financial system because people are worried about banks
mhm.
and all that stuff imploding. So you're right. I think utilities are something to watch. I watch them all the time. It's actually a very good short-term indicator for short-term market tops. But when you zoom out on this big picture, David, it is much clearer that we are building towards, I think, a major market top. And last time it got to almost the extreme we're at right now, we saw the COVID crash, which you could say is a bit of an anomaly, but the markets have this way of knowing what's going on, and we're starting to see the same thing right now in terms of utilities performing very well.
Finally, Chris, let's talk about gold and the dollar. The dollar had a huge rally, DXY, as you know, on the day of the election. We talked about that. How are you feeling about the dollar now that it's come down from its highs? The DXY, that is.
Yeah, so the dollar index here, I like the dollar. My investment account is in US dollars. I think if we go back to the long-term picture of the dollar, I still think the US dollar is the global reserve currency. When all hell breaks loose, money tends to move into the dollar. So I like the dollar index. It has a series of higher lows, a series of higher highs, a bunch of pauses and rallies. And yes, it has a little bit of it's had a rally since Trump got in. Now it's pulling back a little bit. But I do believe when chaos hits, I think we're going to eventually see the dollar push up to a buck 20. The DK, the DX futures chart here, I think we'll see it go up to maybe even 130. We're going to go way back. I believe we're kind of in a similar 2000 tech bubble phase in terms of commodities being the most undervalued in like 100 years or actually ever compared to other assets, very similar to what we saw back here in the tech bubble. So I do think we're going to see money rally into the dollar as a defensive play, which we're already seeing. We saw the same in 2008. And when we have a big rally in the dollar, it's going to put pressure on commodities. It's also going to put pressure on multinational companies. It's going to probably do a lot of damage. Other than those holding U.S. dollars.
Let's switch over to gold now, Chris. Let's take a look at what's been happening. As you mentioned, huge capital outflow out of gold the day after Trump won, and it doesn't look like it's recovered most of it, at least. It has climbed up a bit, but it hasn't recovered all its losses. Yeah, your sentiment on gold right now.
Yeah, so short-term wise, I'm neutral to kind of bearish on gold. It is kind of stuck in a short-term downtrend. It hit the measured move you and I have been talking about for a long time, which is this $2,700 to $2,800 level for gold, which once it hits that level is a measured move. Just like we talked in Bitcoin, going to that 110 level, gold has got the same type of scenario when we look at the overall last super cycle to the upside, the last bull market from the lows to the highs in 2011 and back down. This is the level that gold should be hitting based on its measured move. And now we're starting to see it reverse. So when you step back and look at gold from the big picture, the rally in gold to me is done for now. It's had that measured move. I believe this scenario right here, whoops, let me just grab a pencil. I believe this scenario right here is actually very similar to the scenario that we saw back in 2007, 2008. I think we're going to go into a financial crisis. Gold is going to get hit. We'll see gold down 15, 20, 25% and sell off. So It is still in a strong uptrend. Don't get me wrong, but I believe the measured move is here. I don't think there's a lot of upside. When we look at the daily chart, as you were just saying, David, we have seen a bout of selling hit. As soon as Trump got in, we saw a bunch of selling, lots of volume. And I think we've seen this move into people get out of boring gold and they move into small cap stocks. The Russell 2000 that day he got in, you and I were talking, the Russell was up 6% that day. I think Bitcoin was moving up. So money was coming out of boring gold, which has already hit its target. That easy money is over. Now they're moving into fresh new assets that are primed and ready and will benefit from a Bitcoin trust or a fund and tax breaks on small cap companies. So it really is just a sloshing effect. I think like I hold physical gold. I'm not looking to sell any. I'm waiting for this market to correct so I can add more for the next major leg higher. But right now I'm neutral. We've closed our gold position. We had GLD. We're out of it. We hit our target and we're done. So right now we just let the charts build out another pattern until there's another profitable looking trade set up with high probability.
And the GDX and GDXJ have followed gold quite closely, so you can apply the similar pattern or analysis, I guess, to the gold miners.
Yeah, they generally move together. They're just more volatile.
Yeah. All right, great, Chris. Let's finish off by talking about asset revesting. What can we learn from you, and where can we go to learn from you?
Yeah, I mean, if people kind of like the way that I attack the markets, they can go to my website, which is thetechnicaltraders.com. You should have a link in your description below there. And more or less, I trade ETFs and I rotate from one asset class to another. I don't believe in diversifying and holding a whole bunch of stuff for the exact reason. Actually, if you look at what's happened with the SP 500, we recently had a buy signal in the SPY. It's up 5%. We got out of the TLT and it is down 5%. And it just goes to show you, if you diversify, you'll actually have no return through this, holding stocks and bonds. So my whole strategy is asset revesting is about reinvesting your capital into whichever asset money is flowing to that shows there's momentum behind it. And being able to just navigate the markets from that regard allows us to constantly just pull money out. We don't have to worry about market resets or anything like that. So technicaltraders.com or YouTube at the Technical Traders as well.
Excellent. We'll put the links down below. Make sure to follow Chris there. Appreciate it, Chris. Thank you for speaking with us on Thanksgiving. I know we're both Canadian, so I guess no turkey for us, but enjoy your day. Enjoy your day of no trading, I guess. Markets are closed. Speak next time, Chris.
Thanks, David.
Thank you for watching. Don't forget to like and subscribe.